Welcome to this edition of ESOP University presented by PCE Investment Bankers. PCE is an investment bank providing M&A and ESOP transaction services to middle market businesses. Today, we're talking about whether an ESOP is right for you and your business. My name is David Jasmine. I'm an investment banker for PCE Investment Bankers, and I work out of our Orlando area office. So let's just jump right into our subject. A good place to start with understanding whether an ESOP is right for you is to start by evaluating and understanding your succession planning considerations. There are many issues to consider when looking at business succession. It's important to put all of the pieces of the pie together. Let's start by looking at ownership dynamics. Here, it's important to look at your current governance structure. What about family issues and family involved in your business? What about the corporate structure of your business itself? Perhaps you should spend some time, if you have various shareholders, looking at and researching and soul searching about conflicting preferences and objectives in a succession strategy. Next, liquidity and diversification. What are your liquidity objectives? Would you consider, and are you interested in continuing to hold equity in your business after the sale of part of your business? What about taxes and the price that you want for your business and the ownership in your business? What about leverage preferences in the transaction and capacity for leverage? Next, company dynamics. Here, it's important to look at not only your company, but the industry you operate in. What's the competitive landscape of your business and your industry, and your business versus other businesses operating in your industry? Here, again, it's important to look at debt capacity and tolerance for leverage at the company level. Finally, global threats and/or opportunities for your business and the industry you operate in. Next, management employee succession. Are you an owner that wants to reward their employees when you sell your business? What about providing ownership and equity to your management team? Is your management team depth able to continue to grow your business? Or will the buyer of your business need to add to the management team? Next, timing and risk. Here, it's important to look at the capital markets in general, M&A market. Also important to look at are changes and legislative changes on the horizon that will affect your industry, or perhaps taxes associated with your operations and or taxes associated with your proceeds from the sale of your business. And finally, legislative dynamics associated with the timing and risks associated with the transaction. So, who's right for an ESOP? When talking about the characteristics of who is suited for an ESOP, it's important to both look at the company and the owners of a business. So which owners should sell to an ESOP? While not limited or exclusive, ESOPs tend to attract owners who have the following attributes and goals. Perhaps an owner with significant wealth tied up in their privately held business, the desire for partial diversification, perhaps an owner interested in exiting over time, an owner with a low stock basis. How about an owner who wants to reward their employees in the transaction? Perhaps an owner interested in the continued growth and upside success of their business. And many times, it's an owner who has children involved in the operations of the business and children outside the business. So speaking of children, maybe it's worth spending a little bit of time talking about the flexibility an ESOP transaction can be used for a business owner interested in gifting wealth to the next transaction, to the next generation, in conjunction with the transaction. In our investment banking practice, many times we meet business owners who have family members working in their business and adult children who are not involved in the operations of the business. When faced with estate planning, they struggle with how they can create liquidity to gift to the family members who are not involved in the business, but able to then also retain ownership in the business and perhaps the family culture that they've built in their business for the family members working inside the business. The installation of an ESOP and the sale to an ESOP in conjunction with estate and tax planning allows the owner of a business to pass the children inside working in the business stock or synthetic equity, while those children not working in the business to inherit cash or seller notes taken from the sale of their stock to the ESOP. You know, a leverage in the ESOP transaction allows for the use of low share value immediately following the sale and the ESOP transaction to allow for gifting of shares to family members at a low value, and the use of Section 1042 from the sale proceeds, a permanent deferral on the tax from the gain of the sale of your stock to the ESOP. We have another ESOP University session dedicated to the tax incentives under ESOPs and 1042, so we'll defer on that subject to another day. What about companies that should sell to an ESOP? Let's look at companies. Many of the attributes associated with what companies should sell to an ESOP are really similar to those related to owners that should sell. So let's take a quick moment to look at companies. So obviously privately held businesses, companies that perhaps had a recent failed auction to third-party buyers for their business, or perhaps a company that's in the middle of taking competitive bids from third-party buyers and wants another bidder at the table. That bidder could be the ESOP. Another company attracted to ESOPs are companies that have various shareholders with different liquidity horizons and interests. Perhaps it's a company that is a C Corp looking for and struggling with a path towards a conversion to an S Corp. Another likely buyer would be a company that would be attracted to ESOP transactions would be a company where you have multi-generations holding ownership in a family-held business with various goals related to the continued success of the business. ESOPs can be a non-threatening source of liquidity today and into the future for family members, and is a ready buyer at fair market value in the future, and affords the tax advantages of sale to an ESOP for shareholders now and into the future. Selling to an ESOP, it all comes down to what are your goals and objectives. Thanks for joining me today. PCE is an investment bank providing M&A and ESOP transaction services to the middle market businesses. We welcome your comments and questions, so please feel free to contact me by information listed below. We also invite you to visit our YouTube channel, where we host our ESOP University and M&A University playlist. We have developed many short-form educational videos to assist business owners and their advisors with issues surrounding M&A and ESOP transactions. Just search for PCE Investment Bankers. Thanks, and have a great day.